This communication was prepared for educational purposes only and should not be construed as investment advice. All opinions or views reflect the judgment of the authors as of the broadcast date and are subject to change without notice. Julius Wealth Advisors, LLC, is a registered investment advisor. Our disclosure brochure, available at advisorinfo.sec.gov or through contacting us, provides further detail about our business, services, and fees.
Welcome back. You're tuned in to episode 30 of The Big Bo Show, brought to you by Julius Wealth Advisors, where we tackle the financial world with the same grit and determination as an underdog team in the playoffs. I'm your host, as always, Jason Blumstein, aka Big Bo, CEO and founder of Julius Wealth Advisors. Today's episode, we're diving headfirst into the chaos of market corrections, the political circus, and more. But before you reach for that panic button, let me ask you a question. Could Newton's fourth law propel your finances forward? Now I know what you're thinking. Newton only had 3 laws, right? Well, that's what they want you to believe. But if Newton and I ever met at a Miami Dolphins tailgate, you can bet we'd come up with a 4th law over some burgers and a debate about investing. And here it is. An object not in motion can still stay in motion. Sounds wild, right? But here's the deal. In the unpredictable world of finance, sometimes the best way to move forward is by doing nothing at all. Crazy, I know, but it works. Markets will rise and fall. Political drama will make you want to scream. Housing prices will soar, and the job market will shift. But reacting to every twist and turn, that's where most people trip up. Today, I'm breaking down why sometimes the smartest move is to stand still, take a deep breath, and wait for the right moment to act. So buckle up, because we're about to turn your financial panic into a game plan for success. Trust me, by the end of this episode, you'll see that sometimes the best way to keep your financial life in motion is by staying right where you are. Ready? Let's go!
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame. You're gonna win over time, you know. It's hard to attain, but you're on your way. You're listening to The Big Bo Show.
Brought to you by Julius Wealth Advisors.
All right, let's dive into episode 30 of The Big Bo Show by tackling 2 hot topics: the recent market correction and the ever-present political drama. First up, the market correction. It's been a roller coaster, hasn't it? Markets were down over 10% in just 2.5 weeks, with a jaw-dropping 1,500-point drop in a single Monday morning on the Dow Jones Industrial Average. Your portfolio probably took a major hit. Now, the natural instinct in moments like these is to panic, sell everything, and retreat to cash to avoid further losses. But here's where Newton and Blumstein's 4th law comes into play. Stay put. You see, market corrections are a normal part of the financial landscape, happening on average every 1 to 2 years. In fact, the S&P 500 has dropped more than 10% off its highs in a 71% of the years since 1990. So these dips are more common than most people realize. Let's add some context to this. Before this correction, global markets were up about 16% in just 7 months. That's nearly double what you'd expect in a typical good year, which usually brings about 8 to 10% returns, historically speaking. A pullback was almost inevitable after such rapid gains. It's like sprinting up a steep hill. Eventually, you got to slow down and catch your breath. I know I do. These corrections are exactly why stocks offer higher returns over time. They come with higher short-term risk. It's the number one law in finance. The higher the expected return, the higher the risk. When market corrections take place, it's easy to feel like you need to act fast, but sometimes the smartest move is to do nothing at all. By staying still, you give your portfolio the time it needs to recover and grow stronger. Remember, these downturns are often temporary, but the gains from holding steady are long term. And as we've seen over the past 2.5 weeks, markets have rallied back close to where they were previously. Now, let's shift gears to politics. We're in election year, and tensions are sky high with anxiety in overdrive. It's easy to think that the political drama unfolding on your screen will have a direct impact on your finances. The temptation? To reallocate your investments based on the latest headlines or poll numbers, thinking you can outmaneuver the market depending on who might win, Trump or Harris. But let me tell you, that's a risky move. This is where Newton and Blumstein's fourth law come into play again. Stand firm. Here's the truth. Politics in the grand scheme don't matter much to the stock market and businesses. Why? Because you own a business, and businesses and people tend to find a way to make things work and improve, no matter who's in charge. Most people, regardless of the political landscape, want to live a better life and make progress. That's why the stock market has risen during nearly every president, regardless of which party held office. So, why do people think politics matter to your portfolio? Who wants to scare you? The media, plain and simple. They make money by selling ads, and they need your attention to do that. Sensationalism keeps you hooked, and the more you watch, the more ads they sell. It's a classic case of incentives. Politicians want to get elected, businesses want to maximize profit, and media companies want to sell ads. But what's your incentive? Your incentive should be to make progress for you and your family. The lesson here: block out the political noise, stay focused on your long-term goals, and keep moving forward. History has shown that none of it really matters to your portfolio. Reacting to every twist in the political arena can lead to impulsive decisions that derail your financial strategy. No matter who wins, your portfolio loses if you overreact to anxiety and drama instead of understanding the facts. So let's take a quick break, and when we get back, we'll talk about two other money worries affecting people right now.
Start building wealth by choice, not chance, with Julius Wealth Advisors. At Julius Wealth Advisors, your progress and your gains are our measure of success. Experience personal attention to every detail. We create strong financial plans, use time-tested investment strategies, and offer personal coaching to navigate life's inevitable turns. At Julius Wealth Advisors, we provide clients with a concierge experience in a boutique environment. Join us and let our experts guide you on a collaborative path to financial freedom with sound money management principles. Develop your tailored wealth playbook and help secure your financial future. Start strong with Julius Wealth Advisors. Visit juliuswealthadvisors.com or call 201-408-4644. Email info@juliuswealthadvisors.com. Julius Wealth Advisors, where building wealth is by choice, not chance.
All right, welcome back. Now let's take a closer look at the housing market. Prices are through the roof, and it's easy to feel the pressure to buy now before they climb even higher. But here's the problem. Rushing to purchase a home in this market can stretch your finances to the limit. The temptation to act quickly is strong. But remember Newton and Blumstein's fourth law: hold your ground. Sometimes the best way to move forward is by standing still. If buying doesn't make financial sense right now, consider renting or staying put in your current home, especially if you've locked in a sub 3% mortgage rate. This strategy gives you breathing room, allowing you to use the extra cash flow to grow your wealth and invest in other opportunities while you wait for the market to turn in your favor. And here's something important to keep in mind. While the Fed might eventually cut interest rates, don't expect that to magically make mortgages more affordable. Mortgage rates are tied to the 10-year Treasury, not just the Fed's decisions. So there's no need to rush. By waiting, you're positioning yourself to make a smarter, more informed decision when market conditions are more favorable. Sometimes patience really is the best financial strategy. Now, let's shift gears and talk about the job market. It's shifting, and for many who entered the labor force in the past 10 to 15 years, this is the first time you're experiencing a job market where the balance of power is tipping more toward employers than employees. Well, I hate to break it to you, but this is reality. Welcome to the norm, not the exception. The temptation is to jump ship at the first sign of trouble or grab that first job offer that comes your way. But here's the thing. Sometimes the best move is to stay put. Newton and Blumstein's fourth law remind us that standing still can actually help you move forward. When the job market tightens, it's easy to feel pressure to make a quick change, but often the smartest strategy is stay in your current role, focus on building new skills, and strengthen your professional relationships. And if you're in between jobs, resist the urge to take the first offer out of fear. Instead, use this time to reassess, upskill, and find the right fit, not just the fastest one. Staying in place, honing your skills, and waiting for the right opportunity can lead to better long-term success. So now let's take a quick break, and when we come back, it's time for everyone's favorite segment, Bo Knows. I'll be sharing some thoughts on an Olympic star you won't want to miss.
Bo knows baseball. Bo knows football. Bo knows basketball too. Bo knows tennis? No. Bo knows race. Folks, you don't know Disney.
All right, folks, it's time for everyone's favorite segment, Bo Knows, where we take lessons from the world of sports and apply them to the world of finance. Today, we're drawing inspiration from none other than the greatest female gymnast of all time, Simone Biles. Remember the Tokyo 2020 Olympics? Simone Biles, the most decorated gymnast in history, shocked the world when she made the brave decision to step back during the competition. At the height of her career, with the weight of the world's expectations on her shoulders, she chose to prioritize her mental and physical well-being over the pressure to perform. It was a move that left everyone talking. But here's the kicker. It was also a masterclass in understanding Newton and Blumstein's fourth law, knowing when to stand still to keep moving forward. Fast forward to the 2024 Paris Olympics, and Biles returned to the sport she loves, stronger, more focused, and ready to reclaim her throne. She reminded us why she's the best, winning 4 medals, including 3 goals, and solidifying her legacy as the GOAT. But the incredible comeback was only possible because she had the wisdom to pause, reassess, and then make her move when the time was right. And that's the takeaway for today. Sometimes in sports and finance, the smartest move is to stand still, reassess, and wait for the right moment to strike. Simone Biles showed us this on the world's biggest stage, and it's a lesson we can all apply to our financial lives. So there you have it, folks. Episode 30 of The Big Bo Show is a wrap. We hit you with a powerful lesson from my imaginary meeting with Isaac Newton at a Miami Dolphins tailgate, the untold story of the fourth law of motion. An object not in motion can still stay in motion. Whether you're navigating market corrections, dealing with political noise, or making decisions in the housing and job markets, sometimes the best move is to pause, take a deep breath, and wait for the right opportunity, just like Simone Biles showed us in the Summer Olympics. If today's discussion resonated with you and you're looking for a financial partner to help you navigate these turbulent times, Julius Wealth Advisors is here to guide you. Whether it's managing your portfolio through market corrections, staying focused amidst political noise, or making the right decisions in the housing and job markets, we're in your corner. Remember, building wealth is by choice, not chance. So reach out to Julius Wealth Advisors. Call us at 201-408-4644, email info@juliuswealth.com, or visit www.juliuswealthadvisors.com. And let's start making those smart moves together. Thanks for tuning in. As always, I'll end this show by reminding you to live a life of integrity, seek knowledge, and pursue your passions. Until next time, all the best.
Thank you for tuning in to the Big Bo Show.
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame. You're gonna win over time, you know. It's hard to attain, but you're on your way. You're listening to the Big Bo Show.
Brought to you by Julius Wealth Advisors.